Good morning, everyone. This is Nate G. We're going to do a trade plan today and trade setup. It is Tuesday, April 30th. We are going to do a trade plan setup on UAL, United Airlines. Uh, we currently are in a 30 and 1 hour squeeze. This is the daily chart on UAL. As you can see, we are in an uptrend. We spiked up. Now we're consolidating sideways, which is what we look for in a TPS style trade. We're looking for the move up, a pullback, and a consolidation before what we're hoping for is a continued move up, right? Which is why we play in the direction of the trend. So I'm going to come over here to a 65-minute chart. You can see this here, right? You have your move up, you have your pullback. We're consolidating really tightly along these averages, and we have our squeeze forming right there. So let's make a trade plan for this moving up. First things I'm going to do, as you know, are come in here and put in a value area low, which I'm actually going to use. It's not technically a value area low. This would be a value area low here, as you can see by the VP that's in here, right? So I guess let's do that. Let's put a value area low there. I like to make those yellow, right? And then, we're going to put a value area high here. And you can see here, this is the value area high and low of this node right here, right? And you can see that it is support, resistance, support, resistance, right? And this is on the 65-minute chart. So this is on the larger time frame chart. Okay. So now that I have that, one other thing I'm going to put in here is a stop level at this piece of VP down here. And you can see how it came through and spiked, right? So let's just make that red. And then I'm going to come up here and put in a high target of a break of the high. And then finally, I'm going to use this fib tool. And I'm going to draw from the high to the low. And then I'm going to draw a secondary target at the 1272 extension. Okay? And I'm going to make both of those green. And now I'm going to get in a little deeper to our sort of in like a 10-minute time frame so that we can see a little bit more data. All right. So I look over on my other screen. It looks like we might have a Sniper 2.0 setting up. Those of you who like to play that, go right ahead. But I'm gonna stay on target, on task here. So we have, as you can see now, on a 10-minute time frame, we are into our point of control level, which is right here, which I will also make as a red line. I typically make those point of controls as a red line. So we need to get up and over that. We've had a little spike down today. We had a little spike down before, but we've reclaimed the pattern again. I'm also going to draw a trend line from here to here. As you can see, we've touched it 1, 2, 3 times, right? And we're looking for a breakout up and away from that trend line up into this level, okay? So now that we have that set up, I'm going to use my risk reward tool. I'm going to use a spike of this, spike low. And I'm going to make sure my VP's in the right spot. Yeah, that's pretty good. So I'm going to use my trade tool here. This is a long position tool. I'm going to set it at where we would make our entry if we bought it right this second. I'm going to move this up to a stop level. This would be a little bit too tight, as we can see, because of all these dips. So I'm going to use this spike low as our stop level, and I'm going to move my target all the way up to target number 1 because I'm going to take the bulk of the position off at target number 1. So this gives me, as you can see, a 2-to-1 risk reward. I usually like to have a little bit better than that. I could tighten this up, but I don't really, I think I need to give it some room to play in there. But the nice thing is, if we are leaving a piece on for targets up here at about 55.50, right, that's going to give us more of a 3-to-1 risk reward. So at a minimum, you want a 2-to-1 risk reward on your trades, right? You can have a 2-to-1 risk reward and still be a 50% trader in terms of wins to losses. And if you've honored your stops and taken profit at your actual targets, then you're in good shape. You're a profitable trader. So if we are playing UAL on the 65-minute, I'm going to pull up my options chain here. And I'm going to look at calls. I'm going to look at the May 10th calls. And I'm going to look at the 52s slightly in the money. Okay. So I'm going to look at the 52 Cs that are slightly in the money at, let's just call it 150. They're slightly above that. Okay, $52 calls at 150. I'm risking $1. Okay, I'm risking $1.08, but for argument's sake, I'm risking $1. And these $1.50 contracts are roughly a 50. What are they? They are currently a 56 delta. Okay, which means for every dollar move in the underlying stock, these are going to move 56 cents, right? So let's just for the sake of easy math say 50. All right. So now we need to make sure, if we're going to take this trade plan out even further, we need to make sure that our risk parameters are in place, right? So let's say you have, and we do this all the time, right? We do a nice round number. Let's say your max trade invested in a trade is $1,000, and the most you're willing to risk is $250. Right? That's your most you're willing to lose. Okay? So how many contracts can I buy if $1,000 is my max investment? Yep. So I can buy 6 contracts. Okay. If I buy 6 contracts and we go down to the stop area, we've risked $1. Right? We risked $1 and I buy 6 contracts. Am I still within my $250 risk? For every dollar the underlying moves, our contract is going to move 50 cents. Right. No. I am outside of this by $50. Right? Does everybody understand how that works? Right. So delta's about 50. And obviously this is the simple math, right? So instead of buying 6 contracts to get myself to 1,000, I am going to buy and I'm using nice round numbers. I mean, these are not my numbers, but I'm using this for educational purposes, right? So if I like this trade and these are my risk, my max position size and my max risk loss. In this case, I would shorten that to 5 contracts. I can't write, right? So I have to take 5 contracts to make sure I'm within my $250 risk, my 25% risk. And what I'm going to do in that case is take 3 contracts off at target number 1 and the last 2 contracts off at target number 2. And once I take the 3 contracts off at target number 1, I'm going to set a 0 loss. I'm going to move up to break even my stop on the other 2 in case we come up here and we start to roll. Okay? So that's my trade plan for UAL. We're out, 10 days? So we have time for a 65 or a 60-minute chart to play itself out. I have 2 profit targets. I have a stop level, and I have an entry spot. And we're actually coming into, we could get it at a slightly better price, right? We could get it right in here, which would give us more of a 2.5 to 1 risk reward, right? Now, time decay, sure. You could go further out if you wished. I think a 65-minute chart with 10 days should be enough. But if you want to go out to the 17s, you're not going to pay that much more. You're going to pay, 185-ish for the May 17s. And you just buy yourself more time. Any questions on that? The reason we're going out 10 days or even 17, if you like the May 17s, is to prevent too much time decay. Yes, this is recorded. It'll go up on YouTube, on my Nate G Trading YouTube channel. Nice berserk, well done. How do I determine the higher and lower levels? By looking at the volume profile over here. You see these nodes? Here's one. Here's one. Here's one, right? Value area high, value area low, and point of control. Right? This is the spike high. So that's a target number 1. And my stop level is a volume profile point of control that is all of these people right here that had that support, has acted as support previously. Okay. I chose the $52 strikes. All right, so for this exercise, I am currently getting into UAL. I'll type it in here. 5, 10, 52 C's. On the 65-minute TPS setup. Yeah, well, as you can see, that's a great question. Mindset. Do I use the VP for the trade I'm on, right? If this is 65 minute, I start it here. Yeah, I take some what I would call gross measurements here, and then I move to a 5 minute or a 10 minute, sometimes even a 1 minute, and then I get more information. I can see more detail, right? I can make sure that my levels are correct, right? So first thing we're looking for in this trade is a move up and a break of this trend line. We'll probably see some resistance at this level, at the value area high. I would guess we'd come and retest that trend line and push up. We're probably going to see some resistance at this level as well, right? Maybe something like this, the same sort of retracement there as we get here, and then a move forward. That's if the trade's working the way we want it to, right? It also could roll over. I do not know. I'm just making an informed decision based on the information in front of me. Okay, that's our trade plan, and it's normally when we do a trade plan, we're waiting for an entry. We're setting an alert. We could wait until or see if we get a VWAP touch today on UAL. But I think UAL is in a good spot to get in right now. I think the risk reward is still decent, and we're hovering right around this point of control level. So in this case, we're not setting an alert to get in later. On SE, we did, right? We set alerts down here on this day, and it came in, and we were able to pick it up for a move back up into that high, right? So SE was the same kind of thing, right? We had a trade plan. We did not enter it at that time. We waited until we got what we were looking for. So there's kind of two ways to go about making a trade plan. One is marking up your chart so that you know when it comes into the level you want to buy it at, and you already understand your targets, your stop levels, your risk reward, all of that kind of stuff. And then there's the second one, which is make your trade plan before you put on a trade, even if it's in a good spot. And for those of you who are new to trade planning, you can even write this out on a piece of paper, right? If this dips down to 51.35, I'm watching it for either an add or a stop, right? But if I'm doing that, I'm not taking full position here because I need to leave room to add because my max is still, let's say, $1,000, right? If it moves up to target number one, I'm taking off 3 of 5 contracts and then leaving 2 on at break even stop for target number 2. And you write those things out so that you follow your trade plan, because the worst thing is when you take a trade and you don't have a trade plan and it comes down to here and you're like, oh, that probably is a stop out level, but I'm not sure, I didn't set a trade plan. And then it's down to here and you're like, oh my God, I'm so underwater. Like, what am I supposed to do with this trade? And you're asking in chat, UAL 7 question marks, because you don't have a plan. And then you're like, oh God, it's bouncing, sweet. It's coming back. I'm gonna do great in this trade. And then it comes to your stop level and then rolls again. And you're like, oh my God, I'm down 75%. What should I do? Right? It's because you didn't have a trade plan. If your trade comes into your stop level and breaks it on the hourly chart and closes below that level, cut it and move on. There's tons of new trades, right? But have a plan, right? And stick to it. And then if you're still losing a lot, then figure out what's wrong with your planning and change the way you plan trades. Don't change the trade and the plan once you're in it. Okay, I'm going to cut the recording here and post that thing up. That's our UAL trade plan.